Hey guys, so we've seen over the last week or so that GameStop and AMC have made a bit of a resurgence and had a bit of a rally over the last few days in the stock market. And a lot of what's going on there is pertaining to a potential short squeeze. So I've been asked on my channel, I've been asked in my live sessions, Tony, what is a short squeeze? What is short selling? I don't understand. Can you do something about it? So I've done a little tutorial about short selling and trying to explain what's going on with GameStop and AMC and a short squeeze. So enjoy the video and remember to press the thumbs up button and subscribe to the channel for more engaging content. Okay, in this video I'm going to have a few words about short selling and short squeezes. First of all, I have to explain what a short and long. Short and longer ways of identifying a position. Long is probably what you most understand. That's simply owning something. In this case, I've got the Apple daily chart in front. You buy anywhere. As long as you're in the market, you're still long. Apple, maybe 100 shares, maybe 1,000 shares, maybe one share. It doesn't really matter. Now, to be short something is to try and profit from the value of a stock falling. And in the stock market, you go out and borrow shares from a broker. Okay? Then you turn around and sell them to somebody else. The idea is that you can buy them back for less. So, say you sell them for $500 and you turn around and you buy them back after it's fallen in price to $400. You get to pocket the $100 difference. Now, obviously, if the price rises, it goes against you and you have to buy it back at a higher price. There's an entire situation behind borrowing shares. Not all shares are easily borrowed. So there's that. But if you're sticking with liquid stocks, which you should be as a day trader, it's not hard to find shares to short most of them. A lot of the time, your broker will carry a certain amount of them. So long as you're owning short, you're selling. So there's such a thing as a short squeeze. And a short squeeze is quite often you'll see a short squeeze around earnings time. It doesn't have to be, but a lot of the times it is, or some type of news. What happens is you get far too many people negative on a stock, and they've been shorting it for some time. When good news comes out and turns everything around, and the stock takes off. It's not necessarily the easiest thing in the world to identify, but it is essentially what it is essentially sharp move to the higher. So really, it's kind of neither here or there, but you'll notice earnings came out right there and the market just shot straight up for Apple. Earnings here shot straight up. So anybody who's short in the market right there is trying to cover, meaning buy. So let's just say you shorted here. Market's going to go your way for a while. Earnings come out, or news, or some type of catalyst, and the market starts doing this. Well, your losses are piling up because if you think about it, short seller could, in theory, lose an infinite amount of money because price could mean it's not going to go to infinity, but it could go all the way. Nothing stopping Apple from going to $1,000 a share. If you short it at 100, that's a major problem. Buyers, on the other hand, I mean, the worst you can do is go to zero, and then you just don't have any money. But it doesn't. It does stop. It has a built-in stop loss at zero. It can't go below there. So at this point, it's a short squeeze. Short sellers have to turn around and start buying back shares. And what will happen is they'll put more money in the market, and it will drive the price up rapidly, kind of like what you're seeing here. What's the difference between a surge in volume to the upside and a short squeeze? Well, the quick answer is nothing. It's just an easily identifiable catalyst in a short squeeze, where you have short sellers jumping ship because of a really good news or earnings report. You see this more during announcements, during earnings, that type of thing, because there's a reason for that type of move. Otherwise, it can be a little bit hard to identify the exact reason. But at the end of the day, it's the exact same thing. Any massive move higher Even if it's not technically a short squeeze, it has the same effect on it. I hope that video was informative, and it made things a little bit clearer on what a short squeeze or short selling actually is and how it affects the market. If you did enjoy it, remember to press the thumbs up button, subscribe to the channel, and hit that notification bell if you want to be notified every time I'm going live and trading live. I trade the stock market live every weekday, at least an hour before the market opens and an hour into the to the market opens. So if you want to join me for live day trading, remember to hit that notification bell.